What's up guys, Trevor here with eCommerce Paradise, and today's video I'm going to talk about whether you should start a sole proprietorship or a limited liability company, otherwise known as an LLC. If it's your first time watching, definitely subscribe and hit the like button. Let's get into it. So a sole proprietorship is the easiest way to start a business. It's basically just you, and if you want to start a business called your name and then what you do, you can do that, and then you can go to basically it really just depends on where you live, but usually you just get an EIN number, or you go and get a DBA and then an EIN number. A DBA stands for doing business as. And then you can go to a bank and get a business checking account, and you can start accepting payments with merchant processing accounts like Stripe or Square, or Authorize.net. There's tons of merchant processors, and then that merchant processor will then move the money to your business checking account. It really depends on whether you want to offer services, or whether you want to sell physical products, or whether you want to create a membership site and sell a course or sell software. There's tons of different ways to make money, obviously. So whatever your business does, just make sure that you're going to choose the business structure that's right for you and your life. Okay, and the main thing is whether you need liability protection or not. So if you have assets to protect, like a house, for instance, or a big brokerage account, or a trust, or big amount of cash, or something else, if you have assets to protect, then you're going to want to form an LLC, because it's going to give you limited liability for your company. So if your company is involved in risky things or something like that, and somebody wants to sue your company because something goes wrong, then if you don't have a limited liability company, they could sue you for your personal assets for the business's debts. And that would suck, because then you can lose your house, you can lose everything. So what you really should do is have an LLC. Now, an LLC really it depends on where you live and as to how you'll form it. Every state has their own LLC formation steps. Okay, you form an LLC with the state, just so you know. And some states have franchise taxes for LLCs. Some have them that are just like a minimum payment. Some have a percentage of gross revenue. Some have no franchise tax. So it really depends on where you live and or where you want to live for tax benefits, things like that. Okay. And that's in the USA. Every country has its own version of this sort of thing. Like in the UK, it's a sole trader. That's what they call it. So whatever country you live in, you have to look up the version of it. But the main thing is that if you can get yourself to be located in a state that has no franchise tax and no income tax, then it's really, really beneficial for tax purposes. Wyoming, for instance, is really good for forming an LLC because it's easy and very inexpensive. And if you want to live in another state that has no income tax, then you don't have to report anything. Washington is one of those, South Dakota, Florida, Texas, Nevada, Alaska. So just choose the one that's right for you. And, establishing residence in another state can be difficult in some states and really easy in others. For instance, with South Dakota, it's one of the easiest states to establish residence in. All you need to do is go to South Dakota, stay at a hotel room for one night or even a campsite, and then get a virtual mailbox address, and then you can go into the DMV. You can sign up for a driver's license, give them that address of the hotel you stayed at or campsite, give them your virtual mailbox address and your ID from the state you currently live in, and pay the fees, and you'll be granted a driver's license in South Dakota. And then you can register to vote, and you are now a resident of South Dakota. It's that simple, really easy. A lot of people that are nomads and drive around on RVs and things like that, they go to South Dakota because it's a really, really easy way to do that and get started with no income tax and be able to travel around as much as you want. No big deal. So it's, it really depends on where you live. If you live in California, don't plan on leaving, I wouldn't recommend starting a company in another state like Wyoming, because you're going to have to report it as an out-of-state company anyways, and pay the franchise tax that California has. So you might as well just form the LLC in California. So, but it's really important that you guys understand that an LLC is really, 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 really good if you have assets to protect, or if you plan to have assets to protect. And it's also very easy to start. There's other versions, like for instance, if you have a partner, you can start a partnership that is protected, or you can start a limited liability partnership. Either one is fine. And you can even have limited partners. You can have, members and managers of LLCs. You can even have, corporations. There's two different types of corporations, a C Corp and an S Corp for real businesses. And then there's, corporation status for nonprofits, things like that. But The C Corp is something that's, it costs a lot of money to form, and it requires a lot of regulatory stuff. But the cool thing about a C Corp is if your company gets big enough, you can actually offer public shares for your company. So, you can basically have other investors buy portions of your business. And so a lot of tech companies do this as a C Corp so that they can have other investors invest in them. Now, if you aren't a big group of people that own this company and you're just one person or a family, you can file for S Corp status, which is for a small business, and it'll be passed through taxation. So any money you earn will get passed through to your personal taxes. Whereas with a C Corp, the corporation is taxed, and then your income from that corporation is again taxed. So it's double taxation. Limited liability company is usually based on a sole proprietor or a partnership, or it can be based on a C Corp or S Corp. So limited liability has the option to do any of them. And so, it really just depends on where you are and what you need. If you want to have more advice tailored to you and your specific needs, I would recommend going and consulting with your local CPA. A certified public accountant or a lawyer. They will be able to give you the advice based on your situation as they are actually legally able to. I am just providing this information as, education, entertainment only, because I know about this stuff and I've gone through it myself. But by no means take this as personal advice for you, okay? So that's what you got to do. If you want to choose an LLC or sole prop is totally up to you, but I would just recommend getting an LLC going even though you might not have assets, unless it's going to cost you a bunch of money that you just don't have right now and you're getting started from scratch with nothing, in which case sole proprietorships are fine as well. Okay, I wouldn't worry about it too much in the beginning. As you grow, you can always change and evolve your business as needed. That's what everybody does, okay? All right, if you enjoyed this one, definitely subscribe for more and hit the like button. Let me know in the comments what you're thinking about doing, whether you're considering a sole prop or an LLC and why. All right, I'll see you out there. Take care.